No one can predict the markets with 100% accuracy, but if you've been following this channel, you know that we can increase our probabilities of predicting stock price movements so we can trade like the Oracle of Wall Street. In this video, we will show how we use real-time data to increase our probability of profit by using Oracle stock as a real example, because Oracle, ticker symbol ORCL, coincidentally had some unusual trades worth $925,000 on the last trading day. So without further ado, let's get to the data as usual. As you can see here on the options time and sales tape, April 4th, 11:23 at the 8-second mark, we have these two options, April 19 and July 19. 125 strike calls, 140 strike calls. This is a wealthy investor trading these at the same time. So we can also see it's not just 600 here. If we look at these other trades happening, we can see here multiple trades also happening here at 11:22, 56-second mark for the same two options. And this was 500 here. And then over here we see at 11:17:19 mark, same thing, and the 22-second mark as well. So this is all the same wealthy investor making the same options trades. So this is very unusual. So what are they doing? We can take a deeper look at the data, because that's what we do. We follow and analyze data to make sense as to how wealthy investors are trading, because we believe and we have seen with great proof that they are able to make better financial decisions, which then, if we follow those and trade in the same direction, we can increase our probability of profit. As you can see here, for the April 4th trading day, the April 19 options, 125 strike calls. We had 5,000 volume and we had 11,000 open interest. Based on our analysis, these are being rolled, closed out to take profits. And what this investor is doing is they are opening new trades and rolling their trades to the July 19 options at the 140 strike calls right over here. You can see volume 3,000, much greater than the open interest at 1,600. Okay, so these are the opening trades. Okay, and when we calculate how many trades or contracts this wealthy investor actually made, we can add that up and find out how much were they willing to trade. So for the July 19 140 strike calls, we can see here there's 600. You can see here there's 500. Here's 499, another 499, another 469, and another 469. So let's add this up. 600 plus 500 plus 499 plus 499 plus 469 plus 469. 3,036 contracts or trades. Okay, these call options that they were buying to open. Okay, we can scroll down and you can see there isn't the 140 strike calls anymore for July 19th. Okay, so we also see they paid about 305, 305, 302, 304, 305. Okay, so we can estimate that 305 is the price they paid. We need to multiply the $3.05 by 100 since this is options pricing. Okay, so we multiply by 3,036 contracts and we get $925,000 that this wealthy investor is trading on Oracle stock. Now, this does not exceed $1 million. So that's one of our criteria for a high probability of profit trade. So in comparison to our membership trades, this is actually a lower probability of profit. If you want access to the $1 million trades that are higher probability of profit, make sure to go to our website by clicking the link at the top here. So you can see here at the 140 strike calls right here, it's actually cheaper now because Oracle stock went down after they bought in. So if we want to get in, it's actually going to be a lot cheaper now after waiting a day. All right. The data here has not updated yet. Okay. And that's why it hasn't shown up. But we can be sure that once it updates, you will see that the open interest will reflect that. All right. So they paid $305 for each of these 140 call options. And so this is their trade. As we mentioned, it's currently at a slight loss because they got in when Oracle was trading at 126. Okay, 126. Oracle ended up at the closing price of 124. Okay, so that's why these call options are slightly at a loss. And so we can get a better deal by going in when the market opens now. Okay, and you can see they are clearly bullish going long on this trade with a positive delta. However, there is a negative theta decay. Okay, so keep that in mind if you are trading options, especially long call options. You can see that on the x-axis here, this is the price of Oracle shares. Okay, currently at 124 here. And on the y-axis, this is the profit loss line. If the purple blue lines are below it, this is a loss. If it's above, it is a profit. And you can see the profits being shown here at the dates of expiration. The purple line represents the current date, and the blue line represents the expiration date of these options. Okay, so we can see as Oracle goes up in price, these profits increase. But notice how the blue line stays lower at a loss until it actually crosses its break even at about 143. Okay, so keep that in mind because of the theta decay. That's the break even here. It's essentially the strike price 140 plus the cost of these options, the debit paid. And that's why the break even is at 143 at expiration. But the fact that they bought these now does not necessarily mean we have to wait until July 19, because you can see the purple line starts to become profitable right away. So this tells us this wealthy investor believes the price of Oracle could start to increase pretty soon. Okay, and you can see on the charts, Oracle is consolidating after an earnings rally. And so they believe that Oracle has reached another support level here, as you can see, and that it should bounce up from here, right? It may not go up as high, but they could start taking profits as soon as we start going up higher, right? So that is how we can use real-time data to find out how wealthy investors are trading, because as we all know, the rich are getting richer on Wall Street. And so we want to use their trades so that we can trade like the Oracle of Wall Street. Please smash the like button. If you're interested in more of our work, go to our website, put a link at the top here, where we share higher probability of profit trades that we find based on our analysis, and then set up option strategies to reduce risk and increase profits, because not all of the stock picks based on this analysis will be winners. Some will be losers as well. But if we can diversify our portfolio with the stocks that the wealthy investors are trading, we can dramatically increase our probabilities of profit to predict with higher accuracy stock price movements. Take care and have a wonderful